I'm David Scranton, and thank you for clicking this video. We're wrapping up 2021 and talking about the year in review. We'll also talk about some market predictions for 2022. So now it's time to bring in our guest, Matthew Johnson, owner of Johnson Wealth and Income Management, a retirement income store located in Iowa. Matthew is also the host of the Capitalized Life YouTube channel, so make sure you subscribe to his channel as well. Matthew, always great to have you here on the show.
Hey, thank you, Dave. Thanks for having me back.
So what was the biggest surprise to you for income investors in the financial markets in 2021? The best positive surprise?
Well, for income investors, I think the income investors that have put a lot of their emphasis on common stock equities, they got a big surprise in 2020, primarily because we saw what was it, 27% of the S&P 500 corporations either cut or eliminate their dividend. But as far as like fixed income investing, I was really surprised at the amount of appreciation and what I saw prices do within those preferreds and bonds and things of that nature. Just a tremendous amount of growth, and it just leads me back to helping my client remember that fixed income is a math game. It's not a crystal ball game, right? And we know that if we buy these things right, not only can you get good income, but you can also make some wonderful capital appreciation.
So that's the good side, but how about the headwind? What was the surprise headwind that you found in 2021 that perhaps you weren't expecting?
Well, I think in many respects, I might have been overly confident that we would see the economy come back as quickly as we saw the stock market come back. And yet, I live in the middle of the United States, and I go to a local Perkins, and you still see the sign on the door that says we're closing at 8 p.m. because of shortage of food. And you go into a gas station and they're not, they have no plastic containers. And you're just thinking, my goodness, how long is this going to take to fully recover? It's absolutely astounding to me. And it helps us to understand that the market and the economy are not always correlated. They don't move at the same pace. They don't recover at the same pace.
And it's interesting because generally speaking, the economy is doing well. People are out there spending money. Companies are profitable. So what you're really referring to is this whole supply chain issue that we've had that, I don't know, you and I both thought it would have been fixed by now, but for some reason, we're still struggling getting goods and services to the places that need them, such as the local restaurant.
Mm-hmm. Absolutely.
So obviously that's created inflation. So when you look toward 2022, what do you see being the biggest headwinds for income investors? Do you see this inflation continuing for a while, or are there other headwinds that concern you about the economy or the markets in 2022?
Well, of course, as a fiduciary, my biggest responsibility is to be concerned. I get paid to be concerned, right? That's really my job. But I am concerned because we have so many different pieces of legislation that I feel could be the catalyst that could potentially start the forest fire, as it were. And, when you look around and you see inflation and everyone's talking about inflation, everyone's discussing how their dollars aren't going any further. My real concern is that people understand that when you have inflation, you need more of one thing. And what is that one thing that you need? It's income, right? So when my 401k is going up in value, that's nice. That's really nice. I like to see that, right? When my stocks are doing well, I like to see that. But guess what? That's unrealized gain. I can't pay my utility bills with that. I'm not going to sell those shares. So the emphasis is we can have all sorts of distractions and things to invest in from a diversification standpoint, like real estate and precious metals, to help combat inflation. Okay. There's nothing really technically wrong with having diversification in those things. But the problem typically is that they're not producing income. And so as we go into 2022, I do not believe that this inflation is going to go away. It's going to stick with us. In fact, I heard one of the Feds recently say that this This inflation is going to be transitory like the dinosaurs were, okay, stomping around, scaring everyone for a really long time.
Sure.
So I don't know how long it's going to last, but I know it's going to last. And I know it's going to cost us more to live, say, in 5 years than it does today. And as a result, that means we need to put more and more of our emphasis on creating income for ourselves through interest and dividend paying things.
Mm-hmm. So as an income specialist then, predicting that inflation is going to continue at least through 2022, how do you see yourself, as you said, commodities they might be an inflation hedge, but they don't provide income. So for your clients that need income, how do you see yourself giving them the inflation hedge that they really need?
Well, there's a lot of different ways that we can create income. I know that there's a lot of investors that are, focusing on the stocks or trying to focus on the stocks that pay a dividend. But just by making one small shift, you can go from, say, those mutual funds that are paying you maybe 1.25%, maybe 1.5% in dividend, to actually directly owning the equity. Actually owning the equity, being that shareholder and getting the control and getting paid 100% of the dividend. So you don't necessarily have to abandon equities. I love equities. They're a great tool, but we want to be able to have direct ownership. So being able to make just that little shift is going to be able to increase substantially the amount of income that you get. If we don't have any experience with directly owning, say, a bond, and maybe we have a lot of bond funds, we need to understand the adverse effect of interest rates, what the Feds are doing right now with raising interest rates, and the value of our shares of our bond funds. Maybe make that transition out of those bond funds and get into actually owning the bond individually. And if you can own those bonds and you can take advantage of a lowering bond price because of interest rates, now mathematically, you might even be able to create for yourself a future capital gain when those bonds mature. Making the switch and implementing a little bit of preferreds, maybe a little bit of REITs that have an escalator that pay a good quality dividend that's very consistent, and they have the historical, background to show that they're going to do it. All of these things in and of themselves aren't the perfect tool. There is no perfect tool. There's no app, there's no hack, but it's a strategy, and it's the implementation and the sticking to it, just keeping your hands to the plow and getting those interest and dividends and reinvesting them back into more interest and dividend paying things so that you can have a tangible inflation hedge, more income to actually pay for the things that you need in life and the things that you want in retirement.
Final thoughts. What do you think, what do you see the financial markets doing throughout 2022 at a very high level? I know you don't have a crystal ball, but at a very high level, what do you think investors can expect from the markets throughout next year?
Well, I don't see anything super early on in 2022 that's going to be substantially disruptive. But as I said earlier, I think that there's a lot of catalysts that could create a lot of volatility. So I really don't, I do believe that this market is going to cool substantially. And, what does the word substantially mean? I don't know. We don't have that crystal ball, but I do believe that there's going to be an ear to the rail as far as, what are they going to do with interest rates? If this is another 2018, where they're raising the interest rates too quickly, too often, that's going to have a dramatic effect on the stock market. If we see, corporate taxes go up, we know it's going to cost us more money to buy those widgets, but our personal income tax is going to go up. Well, if they do, are they going to make it retro back to January 1st of 22? I don't know. And then we have to also kind of take a look at, well, what is the capital gains tax going to do? Are they going to implement that? Or are they going to continue to focus on trying to get another $3 trillion in stimulus? That scares me to death. We can't handle that as a country, as an economy.
Yeah, it's okay. So you see the market's cooling. You're not seeing anything that could be a major catalyst for a major drop, but certainly not the kind of growth that we saw in 2021. For speculators in the market, this is a really above average year. So Matthew Johnson, it's always great to hear your words of wisdom. Thanks so much for joining us today.
Thanks for having me, Dave.
Thanks for watching today's video on my 2022 market forecast. If you enjoyed it, click the thumbs up button to give us a like. and make sure that you subscribe to our YouTube channel for new content each and every week.